Market structure. Why is this thing so important to understand on any market that you use or that you see? Follow me and I will show you how to identify trends, sideways and even changes in the market conditions. Most of the retail traders think that directions and liquidity are the most crucial elements to understand how the market moves and where is it want to go. But don't get me wrong, direction and liquidity are also very important elements, but these are just the additions of the market structure. So in this video I will demonstrate to you how to build a clear structure map which will be your tool to understand the market day by day and week by week. The smaller structure of the market is basically this candle pattern. So the first candle must be a blue candle and the second candle is always a red candle. That means the blue one, right now it's a gray one, but the blue one is the bullish candle, and after that it's immediately must be a red candle which is the bearish candle, and these two is formating the smaller structure of the market. So basically the best way to understand what I'm talking about, to open your trading view and try to find the blue and the red candle anytime, on any market what you can see. And there's gonna be 5 rules which you should follow to understand and to draw properly your market structure zones. The first one is finding the beginning of the move. It's basically you need to find the move where the momentum took place for distribution or an extension. Find end of the move is basically where you can see the extension and the distribution, and there's gonna be a little bit of pullback. That's gonna be the end of the move and you should draw your limit there. In the first place you will see where the price is coming from, so it's coming to the downside or it's coming from the upside. And the 5th point is identify the strong and the weak side of the movement. It is really important because once you understand which is the weak and which is the strong part of the movement, you will understand immediately that there it will be a trend continuation or is just going to be the sideways of the market. So let's see how actually does it work. This is a bullish trend and this is a bearish trend, what you can see right now. It's basically you need to find the low of the movement. As you can see here, find the beginning of the move. This is the first. I will pull this right here. It's going to be much easier. So the first one, you need to find the beginning of the move, which is right here, and the end of the move, which is right here. This is our first move right here. And now see where the price is coming from. So the price is coming from here. That means we're gonna identify which is our strong and weak side of the movement. So where the price is coming from here, this is our strong part of the movement and this is our weak part of the movement. And as you can see, we are just going to put our weak here and our strong side here, and it's going to be the same again and again. We find our end of the move and the beginning of the move, which is right here. We know the price is coming here, and we also identified which side of the weak and which side of the strong side of this movement. And basically it's pretty similar in a bearish trend when the market is moving down, but the difference is that the weak part usually it's on the downside and the strong part is on the upside, and we need to find exactly the same like in a bullish trend. So we need to find the beginning of the move. The beginning of the move was this part of the market, and the end of the move was here, right here in the bottom. And see where the price is coming from. It's coming to the upside. So we can identify which is the strong and which is the weak side of the movement. And all the way it's going down the same. Like we were in the bullish trend, just the price is going down, not up. So this is our first example. Here is the beginning of the move and here is the bottom of the move, which means this is the weak side of the structure and this is the strong side of the structure, because this was the first or the previous structure of the movement. and here it is. This was our break of structure to the downside. That means this is going to be the new structure, but as you can see here, it was a huge bullish candle which created a structure break onto the strong side part. That means we need to find the new structure low and high. The new structure high is going to be here, and the new structure low is going to be here. But the sides are rotated. That means the weak side of the market is going to be right here, and the strong side of the market is going to be right here, because there was a structure change here on the strong part. That means now we are on a bullish trend from a bearish trend, like here. And it's going to be the same again. This is our market structure change, and we need to find the low and the high again. Here is our high, and here is our low. And if it's formating a candle pattern, what I was talking about previously, like this, a blue and the pink or the red candle, this is the smallest structure of the stock market, but actually it doesn't matter because we are inside the structure right now, and we can call a structure break or a structure change just after the candle fully broke that part of the structure. Now we just need to focus on how the market structure is. So again, we need to find the low and the high. Here is our low, strong low, because the market or the price is coming from the downside to the upside until here. Because now in the 1 hour we are in a bullish trend, and as you can see here, the price tried to break multiple times the weak structure, but it ended up with a fail, and the market shifted into a bearish structure. So we need to find again the low and the high. The low is here and the high is right here, but our structure lines changed again, because here is the strong part of the market and here it is the weak part of the market, because now right now we are in a bearish trend. Most of you probably ask, alright, but why cannot we identify, for example, the structure from here, because the movement is kinda here until here? Well, this is a good question, but we cannot identify this as a trend or this as a market structure, because this is the 4-hour market structure. As you can see, this is the 1-hour market structure right here, because the 4-hour market structure started to here, and you need to find the market structures in which time frame do you prefer to trade. And here it is, one more example. We can see a structure change to the upside, so we know this is going to be the low of the movement, so this is our strong side right here, and this is our weak side right here. We are waiting a structure change. We probably assume that it's going to be a bullish trend. Right now we made it, cool. And here is the tricky part, because we need to find the beginning of the move. The beginning of the move, probably most of you think this is it, but actually no, this is not the beginning. The beginning of the move which broke the structure, it started right here. And it's not all the way up here, no. This is not. This is our weak high right now, which has been broken again. And we need to move our structure again to here. So this is how to identify the market structure, and this is how to follow it day by day, week by week. And also, you need to keep practicing it. It needs times to identify with your eyes that which is the high, which is the low, which is the strong, and which is the weak side. And after a while, it's going to be much easier. Maybe you won't need to use the draw lines, because it's gonna be much easier for you to recognize just with your eyes. The only thing how you can achieve that is basically just keep practicing and practicing. And after a while, it's going to be much easier.